Good morning, everyone. My name is Agnieszka Gaili. I'm the category manager here at YPO. I do look after corporate financial services category, and insurance services is one of the key strategic contractual arrangements we've got in place and available to our public sector customers. To those of you who are joining our webinars for the first time, just some key housekeeping rules. So before I get started, please understand how you participate in today's webinar. You have all joined this webinar in the listening mode only. You have the opportunity to ask questions by using the question pane of the control panel. I would love to speak to you after this webinar. I will be answering any questions you have raised. If there's a lot of them, we will create Q&A document. And this webinar will be recorded as well. So if you want to listen at a different time or share with your colleagues, again, at the end of the webinar, I will be giving you contact details so you can request the recording. So today's webinar is about insurance providers and the different business models developed by insurance companies. It's very key to understand it, especially when you're preparing yourself for the procurement of insurance covers. There's a lot of challenges that procurement officers are facing when evaluating submissions for insurance, when they are evaluating selection and business questionnaire, and when they need to undertake due diligence on various insurance providers. So what you can expect to learn from today's webinar is the various types of insurance organizations, the insurance market relationships, and how it can create potential conflict of interest. What are your challenges? What you need to understand to get the best outcome out of your insurance procurement process. In terms of, just to quickly, I would like to outline what we have learned so far. So many of you who joined me today were listening to our previous webinars. This is a webinar number 5. So on previous webinars, we were talking about the external and internal landscape of the insurance industry. We're talking about, I was doing a Pestel analysis and Porter's 5 forces analysis of the insurance market. So you can actually understand what influence your insurance premiums and what you can expect, or at what factors you need to look at when you're preparing yourself to insurance tenders. We talk about degree of competition, which is available in the UK public sector market. We talked as well about various stakeholders which are involved in the insurance procurement process, and that includes your internal stakeholders, your insurance finance department, procurement departments, the external stakeholders, your incumbent insurance providers, and of course your insurance broker. And we talked and we had quite a big session about the role and value of insurance broker, how you can appoint one, how to prepare yourself to insurance procurement tender, what value the insurance broker can offer to you, and how you can actually maximize the value of insurance broker, because that is as well important when you want to receive a good outcome of the next stage of your insurance procurement process. So for those of you who are listening for the first time and missed the other 4 webinars, again, you can get in touch with us and request recording. We're happy to have meetings with you or just a conference call. If you've got any questions around any of the things I just mentioned and outlined to you, my team is very happy to help you and share the knowledge. So, okay, we're going to talk today about various business models available in the insurance market. So, why is it really important to understand those business models? So, first thing you need to understand is public sector comprised of various type of public sector organizations, and different public sector organization will require different approach and different procurement tender structure, different procurement strategy when buying insurance. So for example, housing associations will buy and approach insurance procurement in a different way than local authorities. What you need to understand as well that various public sector organizations have varied needs and varied risk profile, and certain risks could be separate from insurance program and covered using a different approach. A good example of that is motor insurance. And certain risks are definitely separate from your insurance program and covered using traditional broking exercise, purely because certain insurance providers, especially Lloyds of London syndicates, they do not respond to OJO tenders, OJO opportunities, and they do require a Lloyds of London insurance broker to approach them for quotes. And the best example of that type of situation is the terrorist cover. So once you understand what, you need to understand what type of public sector organizations you are, and then decide, choose from 4 different available approach to insurance market. And I will just briefly outline what are those different routes to insurance market and which one is the most suitable for which type of public sector organization. So your options are following. There is a conceptual approach to insurance market, costed exercise, nominated markets, and confidential approach. When it comes to a first one, conceptual approach to insurance market, this is something we actually used for when we structured and designed our insurance brokerage framework and insurance placement dynamic purchasing system. This approach initially keeps choice of insurance broker and participating insurers separately. This method allows for direct comparison of each broker's knowledge and understanding of their service provision and available resources and their market strengths and how much support they can provide you with. However, after you appoint that insurance broker in the next stage, it is only in the next stage you're approaching insurers to provide you with a quote. The advantages of the conceptual approach is that it does regularly provide best results. It does encourage innovative insurance program design purely because you're spending a lot of time with your insurance broker prior to your insurance tender to actually look at your risk profile, look at your claims history, and decide whether you can whether you can take more self-insurance, whether you can afford it or not, and structure your insurance program so more insurers are actually interested in bidding for your risk. And this approach concentrates on that knowledge insurance broker provide to you when it comes to insurance market. Who are the capable insurers providing the quote you actually require? The insurance broker, they can provide you with like a benchmarking exercise, compare you with your peers, with other local authorities, so you can see what results you can get from your insurance procurement tender. The second option, the costed exercise, this is something we used for our insurance solution for the registered providers of social housing, for housing association. Bear in mind, we actually mixed the costed exercise and nominated markets approach when we designed this type of solution. But just to briefly outline for you, costed exercise, it's very much a traditional multi-broker exercise in which participating brokers approach the insurance market to find you quotes, to find you pricing. In this exercise, insurers often become disinterested as they can only issue the same price to all the brokers taking part in the review. It's often the case that insurers are presented with different information from each broker, and it is making it more difficult for them to differentiate and provide and provide a good premium and good coverage offer. The biggest advantage of the costed exercise is that it provides definitely costs. However, it does not encourage insurer competition. It does concentrate purely on price, not so much on suitability of cover. When it comes to nominated markets, in this type of approach, several brokers approach just specific insurers to obtain alternative quotes. This is nominated markets. It is a form of costed exercise, but it does attempt to generate true competition, because each participating insurance broker is given exclusive access to a number of insurers, and that helps to create an environment where different proposals can be presented. And the biggest advantage of the nominated markets approach is that it does provide different costs. And however, there is a potential for the best insurer-broker collaboration to be overlooked in this one. And just to give you some examples, the costed exercise and nominated markets, that's approach used in the housing sector. So housing associations buy insurance totally differently to local authorities. When it comes to housing associations, their choice is very much limited. At the moment, they are there is potential to only get 3 quotes from insurance market, and this is from both direct dealing insurers and insurance brokers who only work with a panel of selected insurers. And in comparison, local authorities, they've got, if you're a local authority, you've got access to a wider insurance market. I'm going back to this conceptual approach. When you're choosing just one insurance broker, that one insurance broker can provide you with the quotes with a wide range of insurance providers. The last option is the confidential option. I'm only going to mention this one. I have not seen any public sector organization using this approach before. However, I can understand that some public sector organizations might want to use it to actually see whether the cover they currently got is the best cover currently available in the insurance market. So what confidential approach is about is it does provide a test of the incumbent broker, and the contracting authority is appointing a different insurance broker to actually test whether the holding broker performs and whether they do have accurate coverage provided and at the best price available in the market. Well, like I said, I've not seen anybody using in public sector. I have not seen anybody using this type of approach. Potentially, it comes as a cost, because obviously, when you want to test your current insurance program and performance of your incumbent insurance broker, you obviously need to appoint another person and pay them for the service. So why is it so important to actually understand different options available when you're approaching insurance market and when you're preparing yourself to insurance tender? And why is it so important to understand the various business models developed by insurance companies? Like you can see from my slide, it's because your approach will impact the outcome of your insurance tender. You're not procuring your insurance every year. You're actually entering into long-term relationship with your insurers. You're procuring your insurance probably every 5 years. The standard approach is three-year long-term agreement plus 2-year extension options. Depending on the nature and the landscape of the market, public sector organizations tend to stay with the incumbent insurance providers for at least 5 years. So how you prepare yourself this time to your insurance procurement process will have an impact on what you will be dealing with for the next 3 to 5 years. And then what you need to do is to ensure that the insurers who win your contract, they will support you when you need it. Plus, there are some internal reasons for you to actually properly assess the best approach for you. You don't need to satisfy your organization internal objectives. It might be value for money, compliance. You might need to achieve savings, or you might have some new emerging risks and you require enhanced cover. You might need to look at social value aspect of your insurance contract, or you might need to build resilience for your organization. So wherever the objectives, it is very important that you do prepare yourself. So all the webinars we have done previously, this is webinar number 5, it's all about sharing the knowledge so you understand how the market works, what impacts insurance companies, why you're receiving this type of premium, not the other, why savings sometimes are not achievable in a certain year. The insurance market, it's getting tougher and tougher now. We have seen years when, with a soft market, when you had a number of insurers participating in your insurance procurement tenders. Now we're seeing that the market is getting tougher. It's actually hardening. The majority of issues are around construction, children's services, adult services, large liabilities claims, and obviously we can see from just recent situations happening in UK, the weather will affect how insurers, whether insurers' risk appetite will change in terms of providing insurance covers for public sector organizations. So various business models. Again, why is it so important to understand business models of insurance companies? When you prepare yourself to the audit procurement process, part of your assessment is to undertake due diligence on the bidding model of your providers. It's something that is mandatory. It's included in the selection questionnaire in section 1. And you need to understand when you're receiving insurance submissions, whether your provider is bidding as a single entity or whether they are bidding as a lead contract for a group of economic operators, or whether they are a member of a group of economic operators, or whether they are a subcontractor on whom the bidder is relying. And we have seen, bear in mind, we here at YPO, as per NIPA, we support various type of public sector organization in their insurance tenders. We obviously set up different solutions, insurance solutions for brokerage services and for insurance providers. So we've seen different organizations. We've seen organization bidding as either of those 4 options. We've seen organization bidding as a single entity, as a consortium, and we are seeing third-party administrators bidding on behalf of various insurance providers. For you, if you're a public sector organization, I will come back to this point actually later on. But for you, it's really important to undertake due diligence and understand who is actually providing you with an insurance cover. So when it comes to different business models available in the insurance market, one of the first one, I'm going to explain 3 types of business models to you: direct dealing insurers, broker-only insurers, and managing general agents. I'm going to start with direct dealing insurer. They are bidding as a single entity. The main characteristic of a direct dealing insurer is that they have ability to provide quote directly to customer. It means that they do not need you as a customer to engage with insurance broker. Once awarded, they've got ability to service your account with a minimum insurance broker involvement. They do not pay remuneration to insurance brokerage organizations. And those three, they are the key three characteristics of direct dealing insurer. When you look at the UK public sector market, when it comes to direct dealing insurers, the market is very limited. I'm giving you an example. The main player in the UK public sector market who operates this type of business model, it's Zurich Municipal. They hold majority of the share in the public sector market when it comes to insurance. And one of the key things important for Zurich Municipal is how you approach the tender of how you approach insurance procurement, how you ensure that you deliver transparent and compliant process, and how you manage potential conflict of interest, because one of the key characteristics of direct dealing insurer is that they do not pay a remuneration. So that might create some conflict of interest when you're using insurance broker who is being remunerated by a different type of insurance organization. So something to watch for, and I will come back to this point later on. Another type of business model developed by insurance companies, it's an insurance company called broker-only insurer. With this one, this is a really interesting one because you can see an insurer, this type of an insurer bidding as a single entity. They can bid as a group of economic operators through managing general agents, or they can be represented by third-party administrator, or they can be represented by a three-party administrator. They do provide cover only when services of insurance are being used. So, for example, insurance brokers, they are being remunerated by broker-only insurers for the work they are doing on behalf of the insurers. So things like sharing and making sure the policy documentation is right and correct, and you as a customer, you being provided with the right clauses, with the things that insurance provider proposed to you when they submitted response to your OJU tender exercise. Insurance brokers, they do hold customers' money, and then they pay the insurer. And for those type of services, insurance brokers are being remunerated by broker-only insurer. And for this reason, there is a need when a broker-only insurer responds with a quote that you do actually have an insurance broker available to support you and support them when you will be exchanging the terms of the insurance policy. They pay remuneration. Once awarded, you still will require services of an insurance broker, because in this situation, when the awarded insurer is broker insurer only, you do require a broker to still test the insurance policies to make sure you are covered properly, to make sure that your insurance program is sound. It does provide you with what you need. The insurance broker, you might need help from insurance broker to help you with midterm adjustments to your insurance terms and conditions. So you will still need that middle person to support you in managing the contract when you're dealing with a broker-only insurers. Another characteristics of broker-only insurer is they are the majority of the market in the UK's public sector are broker-only insurers. So 99% of insurance companies who are bidding for a public sector risk are broker-only insurers. 1% is the direct dealing insurance companies. Those type of organization, they can be divided by the risk and sector appetite they've got varied product portfolio. And what's really important to understand as well, that various insurance organizations, they can form strategic relationships with only selected insurance brokers. Insurance brokers do form those strategic relationships in order to provide their customers with a bespoke wording or developed terms and conditions coverage, which is not available in the market, and you need that innovative approach. Just some examples of the broker-only insurers. We've got Alliance, Travelers, Protector, Royal Sun Alliance, Tube, Ocasso, IEG, QB, Ecclesiastical, and of course all those organizations, they will vary in terms of to which public sector organization they provide covers. So just for example, Travelers, they underwrite for local authorities, for police and health. Tube, for example, they will get involved in local authorities tenders and higher education tenders. QBE does provide cover for motor, employers' liability and public liability risk. IAG underwrites property insurance via managing general agent. Yeah, it's just a couple of examples. So none of those organizations is the same in their risk appetite and in the type of public sector organization they are interested in. Another example of the business model developed by insurance companies are managing general agents. I'm going to give you two definitions of managing general agent. First one comes from the International Risk Management Institute. So managing general agent is a specialized type of insurance agent, broker, that unlike traditional agents and brokers, is vested with underwriting authority from an insurance company. Sounds quite complex, especially if you are a public procurement officer. When YPO, ESPO, and NIPO established the Insurance Brokerage Framework Agreement and Insurance Placement DPS, we actually translate the insurance type definition of managing general agent into a using more procurement type of language. So I will give you YPO's definition, something we used in our tender documents. So managing general agent, it's a company who acts as an agent on behalf of their key subcontractors. And I put insurers in the brackets. Just a word of warning here, managing general agents and insurers, they do not like the word key subcontractors, because when they work in partnership with each other, they sign up to a contractual arrangement, which they will never call a subcontracting arrangement. And the key element of the managing general agent, this is coming from YPO's definition as well, is that the managing general agent needs to have delegated underwriting authority. They must have delegated underwriting authority to provide insurance covers on behalf of the insurers they work with. The managing general agents can carry out the business on behalf of the insurer in the two different ways. They can do it either on their own policy wording, something that one of the most known managing general agents in the public sector does, Maven Public Sector. They are MGA and they provide policy one. They underwrite on behalf of other insurers, but they've got ability to do it on their own policy wordings. Another example of MGA is RMP, Risk Management Partners, who as well, they do have delegated authority from a number of insurers, but they provide the insurer's policy wording. In terms of the other key characteristics of managing general agents, they still need to be registered with FCA and registered as an MGA, managing general agent. And just to confuse you even more, managing general agents can operate either as a direct dealing insurer, the first example I have given you on the business models developed, or they can operate as a broker-only insurer, which means that they will only respond when you're using services of insurance broker. And the same thing applies, when they operate as a direct dealing insurer, they have ability to provide quotes directly to a public sector organization. When they operate as a broker-only insurer, they will provide you with the quotes only if using services of insurance broker. In terms of another key elements of managing general agents is they are very popular in the UK's public sector market, probably because majority of the insurance companies, they do not understand public procurement rules, why public sector organization must follow must be compliant, must ensure that the process is transparent and they're treating everyone equally. Insurance companies do not understand why we're using e-tendering portal just to make that process really transparent. Some of the insurance companies, they do not like to respond and provide quotes by the portals, and mainly for that reason. They do like the services of managing general agents. They do provide the hand-holding for them. It's the managing general agent who understands the public sector and how we operate and the duties we've got under public contract regulation. In terms of managing general agents, similar thing like with broker-only insurers. They will have varied risk and various sector appetite, so not every managing general agent will be responding to all different types of public sector organizations. The most two popular ones, they will respond to all of them, but there are some smaller managing general agents who will provide just, for example, motor insurance cover or property insurance cover. So they do have varied product portfolio. And again, similar with the broker-only insurer, they can form strategic relationships with selected insurance brokers. And just a few examples. I have mentioned this to you before. Maven Public Sector. They were established about 3-4 years ago, so still quite a new managing general agents in the UK public sector market, but very well established now. When they started, they were able to provide insurance covers on behalf of 4 different insurance providers. But as you can see from the list, under YPO's Insurance Placement DPS, through Maven Public Sector, you can receive quotes from Aviva, Allied, Brit, Liberty, Beazley, RSA, Chubb. But again, you will see submission just from one provider, Maven Public Sector, bidding on behalf of other economic operators, and you might see a quote from Aviva for motor and another quote from another insurer for property. Another example of managing general agent is Risk Management Partners, where very well established MGA in UK public sector. They underwrite insurance covers on behalf of IAG. IAG does provide cover for property. They do it on behalf of QBE, Ecclesiastical, CNA, and Hardy as well. So quite a very good and well established MGA in public sector. Another few examples of MGAs is Edison Motor. This is a new market player coming to the public sector market. They started underwriting last year, so quite a new MGA. They provide only motor insurance covers, but they underwrite on behalf of Berkshire Hathaway, so quite a big and well-established insurance company in quite well globally established insurance company. Another example is Avid Insurance Services, again MGA, underwrite on behalf of HDI Global. And one more example to give to you is Aon Underwriting Managers. So sometimes insurance brokers have ability to establish a different arm of their business, and they can work with a certain type of insurance companies purely to provide a bespoke offering. But with this type of organizations, they will be providing covers only when you're using services of a certain insurance broker. In this situation, to access insurance covers from Aon Underwriting Managers, you need to have Aon as their appointed insurance broker. So what are the challenges when it comes to different business models available in the insurance market, and again, why is it so important to understand it? So I'm going back to one of the first slides I had when explaining the different business models. This is going back to that OSHA procurement process and selection questionnaire, and you really need to undertake the due diligence to understand who are the providers bidding for your risk and providing you with insurance cover. Bear in mind, when you're receiving submission from someone who is doing it on behalf of another organization, like in the example of managing general agents, you do have a requirement to undertake due diligence checks on those key essential subcontractors in the procurement language. So you do need to check all the insurance companies that are bidding via managing general agent, check their financial stability, whether they are registered with FCA, whether they do have a license to underwrite to provide insurance covers in UK. The same thing is with when you're receiving a submission from a subcontractor who is bidding on behalf of the another insurance companies. This is something we have seen as well. So insurance companies start to use third-party administrators. On this one, bear in mind that the person who is representing an insurance company does not happen to be someone who is involved in designing your insurance program, and someone who as well is working as an agent to you, and then as an agent to insurance companies, because that creates conflict of interest and it needs to be carefully managed. Another challenge when it comes to understanding business models is the transparency and equal treatment. I did mention to you that you know, we've got direct dealing insurers and we've got broker only insurers. The biggest differentiation between those two is that direct dealing insurers, they do not require involvement of an insurance broker, and they do not pay remuneration to insurance broker. And on the other side, broker only insurers, you must have insurance broker involved in order to get quotes from them, and they will be paying extra remuneration to your insurance broker for the services they deliver, and it is based on your insurance placement. So when it comes to transparency and equal treatment, what we need to remember about is the Regulation 18, where contracting authorities shall treat suppliers equally and without discrimination, and they should not make it the procurement tender with the intention to exclude suppliers. or in a way that could narrow competition. So something definitely to watch for, and something we as a public sector organization we can help you with and help you understand in more details. The final thing to understand is the potential conflict of interest, which can exist when you're using services of an insurance broker, or when it comes to different business models operating in the insurance market. Bear in mind, again, Public Procurement Rules Regulation 24, which does require contracting authorities to take appropriate measures to prevent, identify, and remedy any potential conflict of interests arising during a procurement process. I'm just giving you a scenario or situation when that could happen. So, for example, managing general agents or managing underwriting agents might be owned by an insurance brokerage organization. So for you as a public sector organization, when you're receiving submissions from MGAs on MUA, you need to understand how they manage that conflict of interest, how they separate the duties, and how is this managed internally by those organizations, so the conflict of interest is not being created and it's not putting you at risk. Another scenario is where broker-only insurers form strategic partnerships with selected insurance brokers. There's nothing wrong with that. Insurance brokers do form strategic relationship purely because they want to provide you with a bespoke offering. They want to find solution to the challenges you're facing. So sometimes it cannot be done in an open market. Sometimes it comes down to the strong relationship insurance brokers have with the insurance providers. But as a public sector organization who, when procuring insurance cover, must ensure the process is transparent, you need to be aware of it, and you need to put some steps in your process when you're appointing insurance broker to understand what those strategic partnerships are and how you can benefit from those. And personally, I'm a big advocate of those strategic partnerships, and it does differentiate insurance brokers. The insurance brokers try to be innovative, try to actually tackle the challenges public sector face, and they do set up different solutions that actually might be something that you need. So you need to consider it at this step when you're appointing your insurance broker. Another situation when potential conflict of interest might take place is when insurance providers are being represented by TPAs. So you do need to understand what type of organization is representing your insurance company. It might be that it could be your insurance, it might be an insurance broker, it might be someone, it might be insurance consultant, it might be actually someone who is involved in both, you know, like helping you to design insurance program and then helping insurance provider to respond with a quote and premium. It does create a conflict of interest, so again, it needs to be carefully managed. So I think when it comes to business models developed in insurance market, when it comes to public sector, the direct dealing insurers, the broker-only insurers, managing general agents are the key ones which are developed for public sector organizations who are well established and actively bidding for public sector risks. In terms of YPO's insurance solution portfolio, we have developed insurance brokerage framework agreement, insurance placement dynamic purchasing system, and a separate solution for housing associations. And we have done it to to actually support different types of public sector organizations when they're procuring insurance, and use different type of approach to insurance market. So all those three solutions work a little bit differently. The first two, they work very much together because it's conceptual approach. You appointing your insurance broker first, and then you obtaining insurance quotes from the Insurance Placement DPS. In terms of how YPO can help you, so we have already done a lot of work around due diligence of all those different insurance companies bidding and wanting to bid for public sector risks. You are accessing the pre-qualified insurance providers, and they are pre-qualified not only on the business models they developed, but as well on the financial stability. We pre-qualified the key essential subcontractors, which is like if it's an MGA, we've done due diligence checks on the insurance companies that they are available through those MGAs. We very much at YPO, ESPA and NIPO, we police transparency and equal treatment. What we have done, we put a lot of emphasis to verify potential conflict of interest, to evaluate it, and only award the contract to those providers who can demonstrate that they can manage any potential conflict of interest that can exist. And what we have done as well, we actually structured all our solution to make sure you do maximize the best value available in the insurance market, and that is what's very key. And just to finalize today's session, always when you're preparing yourself to an insurance procurement exercise, what you need to remember about is that your aim should be to get as many insurance as possible, quoting for your risk at the best price and best cover they can offer. So I think that's going to be that's it for today. Thank you so much for listening. I hope you have found this session useful. If you've got any questions, or you want to understand more around the business models, more about the potential conflict of interest or strategic partnerships, please get in touch with us. Please email my team at insurance@ypo.co.uk. Thank you for listening. Have a good day.